Hi, I am Dr. Downen, Professor of Accounting at UNC Wilmington. And my hope over the next few minutes is to demystify financial statements for you. Financial statements are normally included in a company's annual report, which is also often referred to as a Form 10-K for SEC filings. Almost all large companies provide access to their annual report, or 10-K, through their website, usually with a link for investors or investor relations or something similar. For this discussion, I will be using the financial statements for Apple. The first financial statement that Apple presents is titled the Consolidated Statements of Operations, what we would normally describe as the income statement. But it is also sometimes titled a statement of earnings, or informally might be referred to as a P&L or profit and loss statement. The word consolidated in the title means that they are including one or more subsidiary companies controlled by Apple. The SEC requires that companies provide 3 years of comparative data on the income statement. Notice that Apple, like about a third of U.S. companies, use a fiscal year end that is not December 31st. Apple's fiscal year end is the last Saturday in September, oddly, which will not fall on the same date each year. Having multiple years of data to compare on the statement allows readers to identify trends that may be occurring. Toward the top of the income statement, or in their case, statement of operations, is where the company's primary revenues will be reported. Apple reports their revenues from product sales separately from their revenues from services, which is informative. It is helpful to see what portion of revenues for Apple come from the different sources and how they have compared over recent years. But it is surprising that Apple only had $298,000 of product sales revenue in 2023, considering that each iPhone sells for more than $1,000. Ah, I tricked you. There's actually an indicator at the top that all amounts are in millions, which many large companies do in their financial statements. So the product sales revenues for 2023 were actually $298 billion. Now that is a huge number. Most of Apple's revenue still comes from product sales, but an increasing percentage is being derived from services, likely from streaming services such as Apple Music and Apple TV. A little further down on the income statement is the gross margin for the period, also often referred to as gross profit. That is not their overall profit for the period, but rather is how much their sales amount exceeded their own cost to manufacture the products and to provide the services, their total markup for the period. It was a healthy $169 billion for 2023. From that, they still need to cover their operating expenses, which includes R&D and selling general and administrative expenses. So the next meaningful subtotal is operating income. That still is not overall profit for the period, but could be thought of as profit or loss from the normally occurring activities. Then, after the non-operating activities are considered, the overall profit or loss is reported. Apple has been very profitable in recent years, for which I and my family take partial credit, reporting more than $90 billion of net income in each year. One other important item of information reported on the bottom of the income statement is the earnings per share. An investor could think of this amount as their portion per share of the company's net income for the period, although the company is not required to actually pay that amount, or any amount, out to the investors. We will see later that out of the $6.16 of earnings per share reported for 2023, Apple paid dividends to investors of only 94 cents per share. The next statement that Apple presents is called the Consolidated Statements of Comprehensive Income. This statement can be a little complicated, so I don't want to discuss it at length. But essentially, they are just adjusting net income for several types of unusual gains and losses that get reported separately, referred to as other comprehensive income, or just OCI. Next is the Consolidated Balance Sheets, which reports the balances of assets, liabilities, and owner's equity as of the end of each fiscal year. Notice for this statement that only 2 years of comparative data are required. Assets are what the company owns, liabilities are what the company owes, and owner's equity is the amount that remains. These reported balances are again in millions. Within the assets, the company will differentiate between current and non-current. Current assets are those that are expected to convert to cash within 1 year. Large components of current assets for Apple are cash and cash equivalents and also marketable securities or investments, including also a large balance of marketable securities as non-current. For Apple, these totaled more than $160 billion at the end of 2023. I like to think of the $30 billion of cash as being piles and piles of $100 bills filling up multiple Apple warehouses. Although, in reality, the cash balance, as it's called for large companies, is usually just their bank account balances, with very little of it in currency and coins. Even so, suffice it to say that Apple has plenty of liquid assets at their disposal. Apple also reports two different types of receivables, which are their claims to collect monies from others. These are probably amounts that they expect to collect from their affiliated distributors. And the smallest balance reported in their assets is for inventory. That is uncommon for a company that manufactures and sells goods, especially electronics. However, Apple is really good at generating demand for their products, sometimes in advance of actually manufacturing the products, so they do not often have a large balance of inventory. The non-current assets are those assets that are expected to convert to cash in more than a year. In addition to the marketable securities, Apple reports about $44 billion of property, plant, and equipment for their land, buildings, equipment, etc. And their total assets as of the end of 2023 were $352.6 billion. We are not done with the balance sheet, though. That was just the assets portion. In the liabilities section, Apple also separates current from non-current based on when the obligations are expected to be paid. Within the current liabilities, the largest reported balance is for accounts payable, amounts that Apple owes to their vendors and service providers. They also reported about $8 billion of deferred revenues. These are also sometimes referred to as unearned revenues, where a customer has paid in advance and Apple owes them goods or services or a refund at some point in the future. Think of things like deposits that customers make for new devices, or prepaid subscriptions for their streaming services. Commercial paper represents amounts that Apple has borrowed from other companies on a very short-term basis, and they also report the portion of their long-term debt that is coming due within the next year. Apple reports an additional $145 billion of non-current liabilities for $290 billion of total liabilities. There are a few elements worth noting from the stockholders' equity section of the balance sheet, although Apple refers to it as shareholders' equity. They combine together their balances for common stock and additional paid-in capital, although most companies report those on separate lines. The common stock account is used to record the par value, whereas APIC is used to record the additional proceeds from selling stock above the par value. Apple has set the par value for their stock at an absurdly low amount, 1/1000th of 1 penny per share. They sell their stock for as much as the market will pay and just record the amount of the proceeds above the par value, which is pretty much all of the proceeds for Apple, as APIC. Apple is authorized to issue just over 50 billion shares. As of the end of 2023, though, they had 15.6 billion shares issued and outstanding. Next would normally be retained earnings. However, because it is a negative amount, it is referred to as accumulated deficit instead. Apple has been very profitable for many years, so it is somewhat surprising that their retained earning balance is negative. We will find out why it is negative when we look at the next financial statement. The total stockholders' equity balance at the end of 2023 was $62 billion. Combining that with the total liabilities gives $352.6 billion, exactly the same as total assets. We call that the accounting equations. Assets must equal liabilities plus owner's equity. The fourth financial statement that Apple presents is the consolidated statements of shareholders' equity. Normally, this statement has a matrix format with columns for each component of stockholders' equity and rows for the transactions affecting those components. Apple has chosen just to report each component of stockholders' equity separately. The first component they report, consistent with the balance sheet, is common stock and APIC combined together. And they show several transactions during the year that resulted in additional stock being issued or withheld. In the retained earnings section, they have the usual transactions of net income increasing the balance and dividends decreasing the balance. And then we see what I suspected was the cause for their retained earnings balance going negative in total. Like many other companies in recent years, Apple has been quite aggressive in repurchasing their own common stock. When a company repurchases their stock, they usually have to pay a higher price on the market than what they originally sold the stock for. That results in a loss of sorts. Such losses are not allowed to be reported on the income statement, but they do generally result in reductions to retained earnings. The final component that Apple addresses in their statement of stockholders' equity is accumulated OCI. Again, OCI reporting is a little complex, so I won't discuss that at length here. They do note here that the dividends declared during 2023 amounted to 94 cents per share, as referenced earlier, which reflects a slight increase year over year. The final financial statement presented by Apple is the consolidated statements of cash flows. The statement of cash flows is fairly complicated to prepare, but it can be very informative. This statement has three sections, the first of which relates to cash flows from operating activities. For 2023, Apple reported total cash flows provided by operating activities of more than $110 billion. Most of that derives from the net income for the year, adjusted for some non-cash expenses and changes in the balances of current assets and current liabilities. The next section relates to cash flows from investing activities, specifically cash inflows and outflows related to the investments that Apple is making, including their investments in property, plant, and equipment. The final section relates to cash flows from financing activities. That section includes cash proceeds and payments related to Apple managing their debt, as well as transactions involving their own stock. They had overall cash outflows from financing activities of more than $108 billion, mostly related again to their substantial repurchases of their own stock, as well as payment of dividends and some repayments of long-term debt. At the bottom of the statement of cash flows, companies will report their total change in cash during the period. This is just the sum of the three section subtotals. For 2023, Apple did have an overall increase in their cash balance of about $6 billion. Basically, all of the cash flows generated from operating activities in 2023 were used to pay against financing activities. So hopefully that gives you a better idea of the type of information included in standard financial statements for a U.S. company, at least some demystification. If you are interested in additional educational programs on this topic or other topics, please check with the UNCW Office of Continuing and Professional Education at uncw.edu/CPE. If you would like to learn more about financial statements and the underlying accounting that goes with them, please feel free to contact me.